Hello, everyone. Welcome. I am Dr. Duru from Ahan Analytics with the market breadth. So you're looking here at the stock of Chipotle Mexican Grill, CMG. Hopefully, I have some good news for those of you who are interested in this stock or holding the stock. I am claiming that there are two reasons to think the stock is back on track. These are not guarantees. These are not predictions or forecasts, of course. And please treat this as educational information. But anyway, the two things that I see, one, let's make sure we understand what we're looking at. This is the 200-day moving average, this blue line here. It measures the average price of the stock, in this case, CMG, over the last 200 days at any point over this timeline. It is an important long-term trend line. And if the line is going up, that means the trend is up and the stock is pretty healthy and strong. And of course, for CMG, because it's such a market favorite and it's been loved for a very long time, this uptrend has been going up all year long and beyond. Now, what are the two things that I see that suggest that the stock is back on track after this very sharp sell-off from all-time highs? Well, number one, this week, the stock broke out above this long-term trend line, and that's the first start of a bullish change. And it also held that support with two higher closes, which in my book means that the stock has been, the breakout has been confirmed. The second thing I really like here is that this CMG has recovered its losses from the last earnings report. And right here is where the earnings reaction happened. CMG lost 1.5%, and it broke down below the 200-day moving average, which was, a 1-2 punch, very bearish. Sellers were able to bring the stock down to around 50 before buyers rebounded, recovered the earnings loss. But then this week's big market dislocation, I'm pointing at it right here, really took the stock for a loop. Now, I wrote in my blog, drduru.com/122, all lowercase, all words. I wrote there on my blog about that day. I explained the drivers. So I'm not going to go through all of that stuff here. But what I do want to point out is that at the lows of this day, CMG almost lost its entire gain for the year. At this point, if you look at this dashed line, CMG fell to a spot where it hadn't traded since the beginning of February. Very bearish move. Now, if you're a retail trader and you tried to buy there, which I tried to do, you were probably very disappointed because trading and volumes are so high that a lot of brokers, in fact, I think all the brokers for retail folks like you and me, were shut down. You couldn't log in, and even if you logged in, you couldn't place any trades. You couldn't trust the prices you were seeing, on and on and on and on. So we really missed a great opportunity here. And for me, by the time I got around to looking at the stock, it was already somewhere around here and right below this resistance line. So I just held off. I wanted to wait to see what was going to happen later. And actually, it moved up and I did a quick trade. But then today on the breakout and confirmed breakout, I added to my position. In fact, I bought some shares that I intend to hold for the long term. And I also bought some call options for a short-term trade. So we'll see what happens. Again, no guarantees. And don't take my trades as trading advice, just describing to you what I decided to do. Now, how in the world did we get here? Let's just take a look because sometimes people question the value of technicals. And in this case, particularly for the short term, the technicals tell a lot on the story of CMG. So remember back in March, the company announced a 50-to-1 stock split. Everyone got really excited. The stock gapped up 3.5%. At the time I released a video just cautioning people not to jump into CMG just because of the stock split. And the stock did churn. It went nowhere for a while until earnings. Earnings created some new excitement. The stock broke out to fresh all-time highs. It rested a while until Goldman came around to initiate a buy. I'm surprised that, CMG has been around for a long time and has been rallying for a long time. I'm surprised that Goldman had just then decided to initiate a buy. As these things typically pan out, Goldman rung the bell at the top, just about at the top. People got excited about that call. The stock ran up really fast, and then bam, big time sell off as people took advantage of the excitement of Goldman's call, and the stock dropped like 6.2%. This essentially was what technicians call a bearish engulfing. It signaled a top in the stock. And sure enough, CMG did not recover from this damage. And it just basically came straight down until earnings greased the skids one last time. So I won't go through all of the technicals here, but if you're watching the technicals, you would have known, for instance, that once it particularly fell below the 50-day moving average, which I didn't show here. Actually, let's go ahead and show it. Unfortunately, because of the version of TradingView I'm on, I have to flip between the two lines. So now I switched this line to a 50-day moving average. You can see if you're watching the technicals closely, CMG held support at that shorter term trend line, 50-day moving average. Then when it broke down, it was all she wrote. And that was a point, again, for short-term traders to either short the stock or get out. And if you follow those technicals, you would have saved money or made money, depending upon your bearish or bullish inclinations. So now we're here at the 200-day moving average, and now the technicals are telling us that, hey, CMG is a buy once again. Now, again, this is just technical signal. It requires confirmation. I think we have the confirmation, but it also requires that you pay attention that the technicals remain valid. So what could invalidate it? Well, the stock could fall back below the 200-day moving average. What would be particularly damaging would be if CMG fell below the intraday low from this week, because that was a major, 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 major low. Even though the volume wasn't that high, and of course the volume wasn't that high because a lot of people couldn't get in and trade the stock. But if it were to fall below that, I would consider that pretty damaging. And I might even consider selling my long-term shares to wait for another day when CMG could reestablish this trend line. Now, when do the fundamentals really matter? I mean, you can see that if you just follow the fundamentals, you can see that from earnings report to earnings report, traders and investors can be very fickle in terms of, CMG's been very fortunate here where it's had positive reactions, but it had a negative reaction at the last one. Well, the fundamentals really matter over long stretches of time. And of course, for CMG, I'm going to go into the weekly view. You could see that, well, because CMG is a very healthy company, well loved, well liked, and all that, yeah, this trend is pretty good. I mean, it's had its moments, and if you have been following Chipotle for a long time, you kind of know where some of these moments have been. I won't go through the long stories, but certainly after the IPO, the stock looked great. This is when McDonald's spun it off. Great uptrend, but then the financial crisis took the stock down as people thought the world was coming to an end. And, CMG rode the long multi-year recovery from there, and on it goes. I won't go through the whole thing. Of course, right here, from 2015 to say 2019, people really were doubting CMG's story. And the technicals at that point, this is the weekly, told you to get out of this stock somewhere around late 2015, I think. And then again, depending on where you're bullish or bearish, you made money or saved money. Anyway, so that's the long-term view. And I think over the long term, what the chart is telling us is that this is a relatively healthy company, but it is subject to periodic bouts of negativity and skepticism. Hopefully that moment, another one of those moments is not here, but let's watch the stock and see what happens. But again, so far, I think, again, for my own assessment, that there are those two reasons to believe that the stock is back on track. So anyway, thank you again for checking this out. Please hit the like button, put some feedback in the comments, subscribe to this channel, check out the blog at drduru.com/122. And I appreciate your support. Thanks for checking it out. I am Dr. Duru with The Market Breadth. See you the next time.